So the selected day is 21st of September, London session GBPUSD. The reason why I have decided to select that date because I haven't made a recap about that GBPUSD trade that has swept me out with literally 0.1 pips. Unfortunately, it would be running currently around 1 to 30 risk reward ratio, but it's perfectly fine. So that's the reason I wanted to backtest that date. Also, there was a mistake by me that I have made because I have woken up a bit late on 21st. So yeah, so here are the news for the day, as you can see.
Ma poi capite se ne divagato un po' di cose.
Sorry, Luciano, I have muted you, and also I have muted Brian too because your microphones were on. So yeah, as you can see, here are the news for that day. We do not have any high impact news in London session, so it is pretty safe to trade. So we do not have to care about anything. We just have to analyze the market and follow the price action. So let's see what has happened on the 4-hour time frame. I did not delete these drawings right here. So yeah, but everyone know what has happened in the last recent price action region. After the mitigation, there was some supply mitigation. Maybe here is a 4-hour supply area that has initiated this structure breaking movement to the downside. Also may break a structure here. Price has reacted on this 4-hour supply, and technically this 4-hour supply has managed to reverse the trend on the 4-hour time frame, and we can call, actually at this point we can safely say that the bearish trend on the 4-hour time frame is bearish. So the 4-hour is bearish. Also, what can we identify at this point? There was liquidity. Most of the part of this liquidity pool has been swept out, but on the other hand, I wouldn't call this one as a perfect sweep. So it's just double bottom creation for the future shorts, and that's why we can expect further drop down, further shorts targeting these double bottoms right here. So yeah, on the 4-hour time frame, what else can we see? After the supply zone mitigation, there was a really valuable extreme area that has caused the swing breakout structure movement to the upside. This demand has given a really nice reaction, but after that, price couldn't really manage to break above anything significant. This was a really valuable supply area that has caused the break. Technically, it has initiated the break of this 4-hour demand area, which has initiated the swing breakout structure movement directly. And on the other hand, price has built up some liquidity on the upside, built up for this supply area. And based on this supply area, we were expecting a possible reversal from this demand area up to this supply, possible reversal here, and continuation from this supply area or the flip of this supply. And technically, neither scenario has happened. Price just started to melt without any bigger pullback to the upside. There was some pullback, but on the other hand, this was technically a middle of nowhere reversal. And after this middle of nowhere reversal, price has just reacted on the last recent supply that has caused the flip of this extreme area. And after this 4-hour supply zone mitigation, price has literally started to melt. So caused the breakout structure here. Couldn't really manage to return back to the 4-hour supply. Instead, the price has just continued to melt, left behind the 4-hour supply. Price reacted on a demand here, and the reason why we can call this one as a really valuable demand, because not the last recent, but the previous swing breakout structure movement. Let me mute you, mate. So the previous swing breakout structure movement has been started from this demand. This is the demand that has caused really nice volume push, volume candle to the upside. Also caused breakout structure here on the 4-hour time frame, and there was a small percent mitigation. So technically, this low point was liquidity for a possible deeper mitigation on this demand, which has happened at this point. It has made a perfect full zone mitigation, and after that, price has reversed back to the upside. At this point, we were still expecting possible reversal and continuation based on the daily time frame. But as you can see, price just reacted without 50% mitigation, this forward supply reacted on it strongly, and after that price had just flipped this area, made the breakout structure here, left behind the forward supply at this point, and this is the last recent forward supply. And the reason why I would call this supply as the last recent valuable forward supply, because on the 15-minute time frame we will see that this movement that has caused the last recent breakout structure, technically this one is just a swing structure on the 15-minute time frame, and this zone can be used as a 15-minute zone because there will be an extreme 15-minute zone that has initiated this structure breaking movement to the downside. So this is the forward event that I would really call as forward supply. Also, we can identify liquidity below it. But on the other hand, at this point, price swept some liquidity, created more liquidity, and there is no any other variable demand zone mitigation. So technically this reversal is a middle of nowhere reversal for us. And what we know about middle of nowhere reversals, they are just liquidity for future movements. So yeah, that's all about the forward time frame. We can play price forward on the 1 hour. And the reason I'm playing forward on the 1 hour, because here is where the session will start. So here is the 15-minute time frame, as you can see. There was some, of course I can ask it.
Yeah, when you go to the left at the price at which we are right now? 4 hour, yes, 4 hour.
All right, let's see.
And yeah, just where we are. This is not valuable, you say, because it didn't break structure. Is that right?
This
just,
one, actually, we can call this one as a valuable zone because it has caused really nice volume push. Technically, the real break has started from here. So the real break of structure has happened from this weak demand area. But on the other hand, of this whole movement, this was the extreme, and this was the decision.
Okay, thanks.
So technically, it's a variable demand. We can call this one as a variable demand. But on the other hand,
because that's the one we're reacting off at right now,
yeah.
I believe. But yeah, it didn't really break structure on
exactly.
its own.
And on the other hand, when session has started, as you can see, there is still no 50% mitigation. It's just technically perfect double bottoms for the 50%. But on the other hand, the current price action region is really bearish. So probably we just could expect that this demand won't hold the price at all, just continue its melt to the downside. But yeah, the short answer to your question is it's a valuable demand.
Okay, cool. Thank you.
You're welcome. So let's get back to the 15-minute time frame. And on the 15-minute time frame, what can we identify? Well, on the 15-minute time frame, there was an extreme zone mitigation, as you can see, which has managed to hold the price. And after this extreme zone mitigation, price has made a swing breakout structure here to the downside. So there was some liquidity here. This liquidity has been swept out with this high, with this movement that has caused the mitigation of this supply area. And after this supply zone mitigation, price has made a new swing breakout structure to the downside. So here was the last recent swing break. Perfect. And let me mark out properly. All right. Technically, this swing break has happened from this candle right here. The reason why I am marking this candle, because there wasn't any body break at this point, not this point too, but this is the last candle that has caused the inefficient push to the downside, that has caused the body break below the previous swing break or swing low point. So this is the last, this is the 15-minute supply that has caused the swing break. On the other hand, however, as you can see, there is a little stop in the market. Here is a reaction. Probably price was reacting maybe on some sort of 15-minute demand from the past, but we do not have to care about that. There was a small stop in the market. And after the small stop in the market, here is the pullback to the upside. Technically, this is a small pullback, which has caused a new breakout structure after it has reached its high point, and we can mark this 15-minute supply out. Technically, the wick is the right supply in this case because the wick is greater than the previous candle. However, it just literally half pips, 0.5 pips bigger than the previous candle. So in this case, I would just mark out with the wick the previous candle. So price has already made a small percent mitigation on it, but as you can see, on the other hand, there wasn't any 50% mitigation. This liquidity has been built up for the 50% mitigation, and look at this perfect 15-minute candle. How did it close? It left behind a huge wick, which means it has swept liquidity from the supply above, also swept all of this liquidity, and even though it has caused a break of structure here to the downside, so technically the 15-minute has changed character here to the upside. On the other hand, this change of character wasn't really a change of character. It was just a sweep, because 15-minute candle closed inside of the next 15-minute supply. Also swept insane amount of liquidity from above this supply area, and technically this was a sell trap for the 50% mitigation on the higher supply. So 15-minute candle closed inside of it, and based on this information, based on this fact, we can look for confirmation entry after the zone mitigation, and probably it will happen in the first half, in the first 30 minutes. If this scenario cannot play out, then we can wait for confirmation entry on the higher supply that has caused the swing break of structure. Also, there is one more supply where we can wait for confirmation entry. This is the supply that has initiated the swing break of structure movement. So here was the pullback. After that pullback, here is the movement that has caused the swing break, but the break has happened directly from this zone right here. But this is the movement that has initiated this whole swing break right here. Above the supply, the reason why I would mark this candle out, but it's currently pretty far away from the current price action region, is because this candle has caused the 15-minute change of character after the supply zone mitigation, and technically this is our extreme swing, extreme zone, which is on the swing high, which is right here at the moment. So yeah, and if we can find enough space between these supply areas, technically we can look for longs up to this supply, and if the supply zone mitigation happens on this higher supply, we can look for another confirmation entry. However, if this zone fails, probably price will fill up all of this inefficiency right here, and probably it will go up to this extreme area right here, and technically these are the plans. This low point is the middle of nowhere reversal, so it will function as liquidity for the future shorts. And there is one more possible scenario, but I am really expecting these scenarios at the moment, which is the new break of structure to the downside. If it happens, we can look for confirmation entry on the newly formed demand area. But yeah, let me read the chat. Ali, what weak zone you mean here? Actually, it's not a weak zone. The reason why I would not call this one as a weak zone, even though the wick is greater than the previous candle, just it's simple, because the next candle's wick has already mitigated this wick right here. So technically, in this case, I would not use the simple wick right here. I would use the candle instead of just the wick. So, but on the other hand, this is just a insanely huge 15-minute supply area, and it has been made by news probably on 20th of September. So yeah, maybe we can find 5-minute supply here. Yeah, but on the other hand, this is not a really valuable supply. Maybe, but currently the price action is pretty far away from that region. We can mark it out, we can look for reaction on it, but I'm not a huge fan of these supply and demand areas that has been made by news, especially I believe there was FOMC on that day. But yeah, on the 15-minute time frame, I would not mark this zone out because it's just too huge to be a zone. But on the 5-minute, it can be. So yeah, these are the plans based on the 15-minute time frame. Let's take a look on the 5-minute. On the 5-minute, actually, is the same. There is nothing else that we can draw on the 5-minute time frame. Maybe this zone only here, but I believe I'm expecting that if price breaks above this zone here, it will go up to this extreme area here. So yeah, but we can look for reactions, and if the reaction prints enough confirmations on this supply area, on this 5-minute supply, then we can look for confirmations on it. So yeah, these are the plans for the session that I have drawn on the 5-minute time frame. So confirmation entry here, here on the higher supply. If this higher supply flips, then we can look for longs, and maybe we can look for longs between the second and third supply area, but there is little to no space to trade. There is literally just 10 pips. So yeah, so these are the plans. Also, on the other hand, there are some 5-minute supplies, 5-minute demands, sorry. These demands can be used for a potential continuation trades. The reason I am saying that because if we are missing the confirmations here, the confirmation entry and the reversal entry here, we can look for potential flip scenarios, potential continuation trades based on these 5-minute zone flips, and we can definitely target this low point for our shorts in this case. So yeah, there are two more plans that I have just explained, but continuations here and here, and these are the plans technically. So yeah, if everything was clear, then I will start to play price forward, but let me drink a sip before I start it. All right, then we can go to the 1-minute time frame. We do not have any high impact news, so it will be safe to trade. So let's play price forward. As you can see, we have a really nice reaction after the supply zone, after the sweep of this liquidity, after this 50% mitigation on this higher supply area, and there was a 1-minute flip zone. There is a 1-minute demand. The reason I am marking this demand out because it has caused a small breakout structure here to the upside, but there was the last recent breakout structure. So technically the change of character has already happened here. Price has flipped this demand area here too. And also I would call this one as the structural low point right here, because technically this is just a whole movement to the upside. Also the strong change of character happened in this case. So we have a really nice reaction, really nice V-shaped reaction after the full zone mitigation, after the liquidity sweep. And personally, I have counted this one as the real change of character and flip point. The reason, even though price has already broken below this low point, because there was the breakout structure, but price immediately filled up this inefficiency for this 1-minute candle. And for me, price has reacted on this 1-minute demand, as you can see, made a new breakout structure, and that's why I was waiting for a flip right here, which has happened. And technically the flip has happened from this candle right here. And here was my mistake. I haven't realized this extreme area up here, which has started this whole inefficient push to the downside. And as you can see, here is the inefficiency that has been made by the extreme area. This is the inefficiency that I did not realize during that day in London session. And I have just marked only this candle out. And I have entered here on the 50% of this candle. Reason why I have entered on the 50% because with a full zone mitigation, 3 pips, I wanted to cover a bit more right here. I didn't want to use 3.5 pip stop loss, mainly because I'm using maximum 3 pip stop loss. So I wanted to cover a bit more. So I decided to go for the 50% mitigation. And this space right here, just about the decision area, which was technically a decision in this case, but I did not realize that during live trading, but it's perfectly fine. There was an extreme area too. And let's count the criterias after I have marked the extreme out. So here is the extreme. All right, let's count the criterias because this is a really nice and this is a really great opportunity. So the first one is the higher time frame zone mitigation. Prices reacted on the 50-minute supply, swept liquidity into it, which is the liquidity take, and price caused and left behind really nice amount of inefficiency. Also, there is inefficiency for the extreme too. We are undoubtedly in a pro trend. 15-minute, 4-hour, 5-minute, everything is bearish. So we are in a pro trend. We have really nice change of character on several places actually. So it has happened here and also on this structural low point. So change of character happened. We have really perfect V-shaped reaction. We also have 50% mitigation based on this 15-minute supply area. Also, we have liquidity to target. In itself, this low point can be counted as liquidity to target because it's a middle of nowhere reversal, and every middle of nowhere reversal will be liquidity for future movements. At this point, price is coming from an opposite sided area. However, there is one thing I did count the not coming from an opposite sided zone criteria. So at this point, I had 9 criteria. The reason I still count this criteria because this 5-minute demand's purpose was to sweep all of this liquidity into the 50% mitigation, into the 50-minute supply area. And yeah, this is not a really valuable demand in this case. Technically, it was coming from opposite sided area, but I still counted it as it was not coming from opposite sided zone because in these extremely bearish circumstances, I wasn't really expecting this 5-minute demand to hold the price. And yeah, the only purpose of this 5-minute demand was to sweep all of this liquidity into the 50% 15-minute supply area. Also, as Blue have just written it, we have strong pro movements, corrective pullbacks to the upside. Just look at how corrective the bullish movements, comparing it to the bearish movements. So this is just a really corrective pullback right here. This is just a really corrective, almost efficient movement to the upside. After supply zone mitigations, price immediately prints inefficient movements to the downside. So there is no doubt about the corrective pullbacks from pro movements. And I did not have combined liquidation for the decision area, but 10 criteria was more than enough for me in order to settle limit order and decisional. But technically in this case, we have combined liquidation for the extreme because the decisional will be the liquidity for the extreme in itself. So for the extreme, we have 11 criterias. For the decisional, we have 10 criterias. So in this case, we can set a risk split entry on both areas because we have more than enough criterias in order to set limit orders on them. Let me delete these drawings right here so we can use risk split in this case. And we can also use it. We can also set a full zone entry on the extreme area, but maybe I would use 3.5 pips right now because I have just swapped out on the decision during live trading. So probably I will use a bit bigger stop loss in the future. For example, 3.5, maybe 4 pips, because I have just experienced a bit too much of these 0.1, 0.2 pips sweeps. So that's why I will use bigger stop losses. So let's set it. Let's set 3.5 pips stop loss on the extreme, and I'm sticking to the decisional with a 50% mitigation with 3 pips stop loss because it is covering really great space just above the decisional area. And also for the extreme, we are covering a really nice space with 3.5 pips stop loss. So let's see what happens. So we are using a risk split here, 0.5% on each area. And let's play price forward. Let's see what happens. We have a tag on the decisional at this point. I have done some backtesting yesterday in Gbpusd and 3 pips stop losses. Good. All the sweeps are saved with that bigger SL point. Yeah, Clems, that's why I'm going to use a bit bigger stop losses too. So we have a tag on the decision. Here was the reaction. And my original break-even level is right here. So if this low breaks right here, I will put my stop loss into break-even. But unfortunately, here was the sweep on the decision area, as you can see. And we have a tag in on the extreme in this case. Let's see. We immediately have a really nice reaction after the extreme zone mitigation, but it's still unbroken right here. So I won't put my stop loss into break even at this point because we do not have a body break. So yeah, let's play price forward. We still do not have a body break here. This is just pure liquidity creation for the future shorts, actually on the 1 minute time frame. But on the other hand, there is some liquidity creation, but price has already swept insane amount of liquidity from this region. So I'm not really expecting that price will sweep us out, but if it sweeps me, it sweeps us out, sorry, then we can still wait for a confirmation entry here. So yeah, I'm sticking to the plan. I want to see the failure of this low point with a body break, which did happen right now. So the extreme is in a break even. And let's see what can we find after this zone mitigation. I haven't told you my final TP, which would be this low point for 7 risk reward ratio. I would be more than happy with it. Yeah, it would be 7.6 for the decisional, and it's 7 for the extreme. Probably after the break of this 5 minute demand here, I would close some partial. Yeah, definitely. During live trading, I would close some partial exactly at the break of this low point, and my final TP would be here. So that's what I'm sticking to. We can close some partial here. So 50% of the whole position has been closed right here at almost 1-to-5 risk reward ratio. So we have already booked some profit on the extreme. Let's play price forward. But on the other hand, right now we have a 5 minute demand break, which means we can look for possible continuation entries. As you can see, this 5 minute demand right here has been broken from this 5 minute supply area. And this 5 minute supply area has caused the break of the 5 minute demand. And on the 1 minute time frame, we can identify liquid we can identify a 1 minute refinement inside of it that has caused the volume push to the downside. Also on the 1 minute time frame, we can see that price has reacted on this 5 minute demand, and after this small reaction, the flip and the break of this 5 minute demand has happened from this 5 minute supply and directly from this 1 minute area. If price can manage to build up some liquidity for this 1 minute refinement, we can enter on this 1 minute zone. Also, we can still wait for a confirmation entry here and targeting this low point, maybe targeting some deeper price action region. So let's see what happens. We have a new breakout structure, but on the other hand, we have a full TP hit on the extreme area. As you can see, let me hide here. That was my sweep right here during live trading. Price just barely swept me out, but swept me out right here, and it would hit my final TP for 7-to-6 risk reward ratio with 10 criteria. So yeah, I was a little bit unfortunate here, but it's perfectly fine. Also, on the other hand, I have immediately find my mistake. There was an extreme area that I did not realize at the beginning of the session. And yeah, that was my mistake. Price had to mitigate the extreme area. The decision became liquidity for the extreme, and the extreme area hold the price, which has initiated the character changing movement. So yeah. On the other hand, we will have a new breakout structure at this point. Right here, we have a new 15-minute breakout structure. And in this case, after this 15-minute breakout structure movement, I would not execute a trade directly on this 1 minute refinement, because after this 15-minute breakout structure movement, price can manage to go back to some extreme areas. For example, there is a 15-minute area. Let me show you. Also, let me delete this break-even line. This is the 15-minute candle right here that has initiated the structure breaking movement to the downside. On the other hand, this 5-minute supply is still valid, but probably price will go up to this 50-minute supply where we can wait for confirmation entry. We just have to confirm one of these areas if price can confirm it, and let's see what happens. These are the plans technically. Nothing really has changed. After this breakout structure, we can wait for confirmation entry on this 5-minute supply, on this 15-minute supply, and also on these higher supply areas. So yeah, let me delete these areas right here. Perfect. And let's see what happens. On the 5-minute time frame, we cannot identify anything else. So these are the supply areas where we can wait for confirmation entry. Let's see what happens. We have a 5-minute supply zone mitigation, but price has made a full zone mitigation on the 5-minute supply. On the other hand, it has created some liquidity just above the 5-minute supply, and it's just a really small percent mitigation on the 15-minute supply. So at this point, currently, I'm waiting for a deeper mitigation. If it happens and changes character, gives us confirmations, we will be able to execute sells. But we just have to react and look for a reaction on this 5-minute supply area. But on the other hand, there was really small amount of liquidity at this point. Currently, I'm missing the liquidation for the higher time frame area, for this 5-minute supply area. So yeah, let's see. Here is the last demand that has caused the breakout structure to the upside. Here, so here is our character changing point, which actually is happening right now. And as you can see, the change of character happened. Unfortunately, this is the candle that has initiated the character changing movement. We can't really find any inefficiency in this movement. And also technically this movement can be liquidity for a possible deeper mitigation on this 15-minute supply. And yeah, I would mark this liquidity out properly right here. We have really nice amount of liquidity after the 5-minute supply zone mitigation. Also, it's just a really small percent mitigation on the 15-minute supply. This is not a V-shaped reaction after the 5-minute supply zone mitigation, even though it has caused change of character. And also, I'm missing the liquidation for this 5-minute zone. And yeah, let's see what happens. Because of liquidation was missing, liquidity take was missing, base criteria was missing, this wasn't a potential entry POI. Even though, as you can see, price reacted on it pretty well, caused a new break of structure to the downside. And there was another area that I was monitoring, by the way, during live trading, which was right here. So after this reaction on this character changing supply area, price has caused a new break of structure right here. Also, on the other hand, it has flipped the 1-minute demand. As you can see, that has caused the 1-minute change of character at this point. We do not have to care about this change of character to the upside, but price has reacted on this 1-minute demand. And after the reaction, it not just caused break of structure, it has also caused a flip. So this is a possible continuation plan in this case. Luciano, where do you see triple tops? Right here. It's barely. We can't really call this one as liquidity because it's almost candles next to each other. So it's not that liquidity that we are really looking for. It would be liquidity if price would create this movement right here. This would have been triple tops.
Okay, sorry if I speak, just because I saw this little supply right here and I thought that would have been something like this. Sorry for...
It's perfect. Use your microphone anytime you want.
Thank you.
You're welcome. This is not really liquidity. These are just candles next to each other. These cannot be liquidity. Candles next to each other. Time has to pass between the candles in order to be liquidity. So yeah, even though also on the other hand, there is a really small amount of inefficiency. Yeah, but this is not a really volume candle where I'm really looking for an entry opportunity. Even though it has caused some inefficiency, it's at this point is directly part of this trendline liquidity. So the reason and the scenarios that I'm waiting in this situation, in this case, would be liquidity creation for this area right here, which would be a perfect continuation type 1 in this case, or sweep of this liquidity, deeper mitigation, and another confirmation entry. This candle right here, even though it has left behind a really small amount of inefficiency, it's just not a volume candle that we are looking for that has caused really nice inefficiency. Just compare this candle to this candle that has caused the inefficient push. Yeah, exactly, Luciano. It can be just a trap. Also, it seems like a perfect sell trap at the moment because there is liquidity just above it. So yeah, I'm waiting for liquidity creation for this potential continuation type 1 entry POI or deeper mitigation on this higher time frame supply area. So let's see what happens. We have double tops. We can call this one as double tops. As you can see, time passed between this high and this high. There was almost 10 minutes has passed between the first high and second high. So this can be considered as double tops. So technically we can consider this one as liquidity take, and let's count the criteria for this potential entry POI. In this case, we can use the continuation criteria tracker. So the first one is the breakout structure which has happened, or flip of something valuable. It has happened. This was a 1 minute demand that has been flipped, so tick. Second one, liquidity for entry, tick. There is the second criteria. Third one, inefficiency, and we are clearly in a pro trend. 4 hour, 50 minute, 5 minute, every single time frame is bearish. So we have all the 4 base criteria that we need. Liquidity sweep before the break. Before the break, price couldn't really manage to sweep this liquidity, so there wasn't any liquidity sweep before the break. Sixth one is the volume flip, volume breakout structure. It's also a tick, so it can be considered as our fifth criteria. At this point, price is not coming from any opposite sided zone, so we can consider this one as our sixth criteria. And this low point in itself would be liquidity target because it's a weak low. And on the other hand, we can identify a trendline liquidity right here, which is liquidity to target. And 7 criteria is enough for me in order to set a limit order on this 1 minute entry POI. On the other hand, probably I would use reduced risk right here because of this small percent mitigation on this 15 minute supply. And there is still a chance for the price to sweep this liquidity into a deeper region, and after the deeper region, mitigation prints the real confirmations. So in this case, I would set a limit order here. Let's set on the full candle. Probably it can cover with 3 pips. No, let's stick to the 3.5 right now with a full zone entry. And we have really nice double tops just below the supply area. And let's play price forward. We can call this one as triple tops. Also, we can call this one as trendline liquidity. We have really nice amount of liquidity take. Let's see what happens. There is the sweep. Liquidity has been swept, as you can see, but it has reversed without a tag on this 1 minute supply area. And probably after the sweep of this liquidity, even though it's a middle of nowhere reversal, personally on the 1 minute time frame, I would like to see some clear liquidity pools. For example, double tops, triple tops, trendline liquidity, and a single middle of nowhere reversal is not enough for me in order to count this one as liquidity for the entry, liquidity take for the entry POI. So I would delete my order here and I would wait for more liquidity creation, because, and the reason I am deleting my limit on this entry POI, because it has caused a new breakout structure here to the downside. So yeah, also price has swept already really nice amount of liquidity, and I'm not really expecting that expecting a reversal after this supply and the new breakout structure to the downside. And also the target would be this low point perfectly, but it's not a 1.5 risk reward ratio, so at least I would target 5 risk reward ratio, but we can target deeper demand regions. For example, on the 4-hour time frame, we can look for some 4-hour area. For example, the lowest point of this demand that we have just discussed with Etienne, this one, or the 50% of this area. But as you can see, this is the 4-hour candle. So we had some news in New York, and because of that news, I have just missed in live trading a 1.30 risk reward ratio trade. But yeah, it happens. So let's play price forward. Limit has been deleted here, but on the other hand, we have some double tops. So we could set our limit back right here. And actually, let's do it. So it's still there. Price has created more liquidity for that area. But unfortunately, in half an hour, price a session will close. And after that, as you can see, price has just started to continue its melting, and session has closed right here with this candle. So yeah, in overall, we could find a risk lit entry here just at the beginning of the session, and almost in this last third of the session there was a potential continuation entry which turned out as a no tech trade. But yeah, and actually that's all, guys. Let me stop the recording right now. So let me stop the recording, sorry.